Welcome to this live broadcast Q2 commentary with the CEO of Sivers Semiconductors, Mr. Vickram Vathulya. Investors are welcome to ask their questions in the live chat, and I'll raise them along the way. Please consider the fact that listed companies do not comment the valuation or the stock price, nor inside buy or sell, but it is public information. Welcome, Vickram.
Welcome to yourself as well, Matthias. Very happy to be here on this interview.
Good to have you here. I will start off with a bunch of questions. And start off with, could you start by summarizing the quarter and where Sivers stand today?
Definitely. So, as I mentioned before, we had a softer quarter, and first half will be soft with inflection in the revenues expected in Q4. This has to be looked at from the context of what are we preparing for, which is a very pivotal transformational 2027. So in the context of that, the big highlights from the quarter are a continually growing pipeline, solid financing secured for our runway, and some of the revenue programs from the pipeline are materializing in terms of production orders. So a tremendous amount of focus on driving pipeline conversion and production ramps. And that's where the resources are getting allocated, even if that means some near-term pressure on the revenues, but it's the right thing for the company to do to enable our transformation.
Thank you. And you've talked a lot about the opportunity pipeline. How do you comment the development of this during the quarter, and what has to happen now for that pipeline to convert into revenue?
Got it. So two important things investors need to take away. Number one, the pipeline has grown very strongly in the quarter. From May to July already, we saw 52% increase in the pipeline, resulting in a $1.2 billion pipeline. And in my earnings calls, I talk about how we quantify numbers in the pipeline. And these are based on customer interactions, based on solid assessment of fit of our technology to their products and the relevance of their products to the market, and initial indications of customer forecast, right? That allows us to quantify this into a dollar number. That's how the $1.2 billion pipeline is constructed. And we show that is sized for a period of 5 years, which is our strategic horizon, which was 26 through 2030. The second thing that investors should not lose sight of is it's not a question of when will this opportunity pipeline convert to revenue. It is converting to production orders and revenue as we speak. I indicated some production orders already in yesterday's call. They didn't come out of nowhere. They came out of this opportunity pipeline. So people have to be very clear on their understanding that the opportunity pipeline conversion to revenue is happening one deal at a time, one production order at a time. And it's not some box sitting somewhere that may someday, show us these production orders. We are continually drawing from that pipeline, converting those into production orders, which lead to revenue. And we have shown some examples of that already, and more of them are coming along the way.
Can you just comment on the fact that a lot of investors are wondering, why can't you mention just a few customer names and so on right now?
Yeah. So again, this comes down to corporate confidentiality. Many of our customers are high-profile customers, and it's not possible for us until we are collectively able to talk about it in public. Okay. But it's very clear that in the markets of focus for us, there is only a certain amount of potential customers. And our job is to go find the best opportunities and drive them through the opportunity pipeline funnel. When able, we do talk about our customers. When we can talk about Tachyon Networks, when we can talk about Allspace, we talk about them. And there we try to give as much progress update as possible with meaningful milestones, which all we want to take to production orders and ramps.
Okay. If we look at the coming 12 through 18 months, which part of the pipeline are closest to ramp up?
Got it. Again, I'll reference our earnings call yesterday. In our fixed wireless business, Tachyon Networks, we've gotten the production orders for the first initial production orders, and we're working to deliver those. Allspace came in with their production order for 2027. We are working on those. That's space and SATCOM. We are expecting, as I said, orders from our LiDAR customer, and that will enable production ramps from Q4 2026 onwards. So those three are basically fixed wireless access, SATCOM, and LiDAR. Those three are happening now. And as I've mentioned, next coming through are going to be our other fixed wireless customer, wireless access customer, as well as pluggables, including Jabil that I mentioned yesterday. So that's what the audience has to expect in the coming quarters. And they're all coming from the same exact opportunity pipeline that I articulate to our audience about. It's not coming from somewhere else. That's pipeline converting into production orders leading to shipments.
Thank you. You mentioned Allspace, and they placed a firm order, production order of more than $8 million US. What does that order mean for Sivers?
It's a lot of validation of the strength of our technology and their technology, number one. Okay. But number two, again, this is a place where I want to help our audience understand. I mentioned that order is for 2027 and is the first of a multi-year production cycle. So depending on how many years that program goes, the overall revenue from that program is a certain multiple of $8 million, right? That's what one would find inside the opportunity funnel associated with that customer. So it rolls out, first year is in, but it's a multi-year production cycle. So that multiplier is the number that would sit inside the opportunity pipeline. So again, a very tangible example of how something from a pipeline gets into production and starts a multi-year production cycle, right? So very exciting for us because now that this product is going to get out in the market, a lot of others also want to put out products like these that Allspace has done. And Allspace's opportunity pipeline is also continuing to grow. So very exciting for our SATCOM business.
Okay, thank you. And you have also announced several AI data center and photonic partnerships. Which of these are closest to commercial impact?
Sure. So definitely a lot of engagement and traction with our portfolio, like I mentioned yesterday. As I mentioned yesterday, in 2027, the strongest prospects for us to take into production are pluggables. Near pluggable optics and co-packaged optics, we see as the wave after that. But there is existing shortage in pluggables, and we are bringing relevant laser technology into the market. That's where we are seeing strong engagement. While we cannot name others, we talked about the advancements we are making with Jabil, but there are many others who are now engaged with us. And when the time is right and I'm able to talk about them, I will bring them out to the market and talk about them, just like I've been able to talk about Tachyon, Allspace, Jabil, etc.
Gotcha. And you recently raised capital. What will that money be used for, and how does it improve Sivers' ability to capture growth?
Yeah, good question. So again, we had a fantastic Q2 where we were able to bring in investors and investment dollars to basically fortify our balance sheet. Okay, we want this bulletproof balance sheet so we can do the things that we can to accelerate our growth. A part of the proceeds we'll use, as I mentioned yesterday, for expanding our Glasgow facility because we are going into a hybrid manufacturing mode between us and our foundry partners. Some of it will be used to put field resources in play because as our universe of customer engagements expands, it becomes tougher to service them just from our core engineering and business development group. So we need sales and field applications engineers in the regions where our customers are. So we're making sure that we are putting such resources in place and also accelerating some of our standard product developments. If you remember, our standard products help faster opportunity pipeline conversion than custom products. So we're trying to bring more of those opportunity pipeline products that can be standard products.
Okay. You have also discussed a potential US listing. Why is that important for Sivers, and why at this stage?
Yeah, so as we continue to strengthen the focus on our key markets, as you know, Matthias, the largest budget spend for our focus markets is the US. There's a lot of customers, there's a lot of savvy investors also in the region, and it improves our market relevance globally as well. So there's customer proximity, there is investor access, visibility, and liquidity, right? As we increasingly grow a global business for Sivers. That's why the US dual listing is very important.
Thank you. And finally, my last question, what should investors watch most closely over the next few quarters?
Yeah. Listen, Matthias, I mean, I come to these earnings calls and our news that we put out in the spirit of sharing as much as I can in topics relevant to our business and the growth of revenues and products and profitability in the company. So that is something they should continue to expect, that once I have the visibility, we have accomplished meaningful milestones, and we are able to talk about our customers because we are at the point where collectively we can talk about it in the public, the audience will be the first to know. And that's something I remain committed to for our investors. Okay. At the same time, in the coming quarters, like I laid out what is ahead of us, we are getting ready to support the production orders we have. We continue to support the customers to get them to place the next set of production orders, all of which I lined up in my presentation over the next few quarters, what should be expected. And I'll continue to give updates on that, and so will my team whenever possible and in a timely manner.
Okay. When it comes to your photonic solutions, what can you say about competition in that field, and what are your strongest points?
Yeah, so two things. Number one, we are newer entrants compared to people like Lumentum and Coherent, who are very well-established players, right? That being said, we believe our indium phosphide manufacturing platform is world-class. We believe the technology and products we are bringing in are very relevant, including our laser array technology and our optical amplifier technology. That being said, the need of the hour right now from customers wanting to engage with us is technology they can trust with capacity they can get. That's the combination that we are able to bring now between us and our foundry partners. Our technology in lasers, laser arrays, and optical amplifiers, and our partners' manufacturing capacity, to which we'll add with our own manufacturing capacity as well. And that's what puts us in a good place, and a solid top three in my mind is an ambition we can drive towards.
Okay, and another question when it comes to your CapEx. What can you do to stop the bleeding, so to speak?
Yeah, so if you look at the underlying economics of our business, I and my CFO, we run a very tight ship. There's a certain amount of resources you need to make this business plan happen. You can't invest below that. Okay, that's number one to know. In terms of our spend, we are keeping very good controls. What we are navigating now is a transition from historically NRE revenues, which by definition are non-recurring, to product revenues. You cannot time that transition without any gaps. You cannot perfectly plan when your products go in while you taper your presence in NRE projects. And that's what we are going through now. We're taking some tough decisions where we are consciously reducing our exposure to NRE type projects, pivoting those resources into getting all these product ramps in place. And that will cause some near-term pain, but that is necessary to enable this transformation. But make sure that the audience realizes the underlying theme on our spend is very fiscally responsible. I almost always like to run our organizations on the border of a stomach that's full to a border of a little bit hungry, so that we make sure we're always thoughtful about our spend. And we have raised a tremendous amount of cash. We have a fortress balance sheet that allows us the runway to enable the product transformation.
Okay, and if I were you to give a final remark, if you want to address the investor community, what would you like to tell them?
So I think the main thing that I would like to tell the investor community are two things. Number one, in a transformation like this, some patience is required both from the company as well as our investors. And we are happy to see that a lot of our investors are invested in seeing us through the transformation journey. So I really applaud the investor community for being along with us. And in return, my commitment to the investor community is when and as much as possible, I'm bringing news to the community that's relevant in this transformational journey. I try to reduce all the other noise around us. I try to focus on what it takes for this company to grow into a successful products company. And that's what the investors can stay, true to from my side. And we will bring them relevant information as soon as it's possible within our constraints.
Okay, thank you. That was every question I have to you today. Thank you to the investor community for your interest, and thank you, Mr. Vickram Vathulya, for all your answers.
Thank you so much. I appreciated the time with you, Matthias.
Likewise. Goodbye.
Bye.